Hey guys, happy Friday. Hope everybody had a good week. I know it's been a little bit brutal for the cryptocurrency market, but I hope you guys are enjoying life outside of the crypto market. And rest assured, our plan does not change, has not changed, and we will continue to move forward um, with the cryptocurrency investments, okay? So let's dive right in. Hmm. Last time we left off on this sort of downtrend, and earlier today I went ahead and drew this horizontal support line around the $92,000 mark. We'll see if this holds. It's a rough estimate. I mean, it's not the most perfect support line, but I think it's a pretty good reference for us to just look at. I mean, earlier, um, we were sort of retesting it and seeing if it could come away from it. And now it looks like we're going to get another red candle to retest it. So we'll see. Um, to be quite honest with you, I mean, I've said this time and time again how we were going to test the $92,000 mark, and we have done that now twice. And usually when I see symmetrical red and green candle, such as these, usually that's a pretty good indicator that we will stay above the support line. Now, I understand there are some shadows down here, as you can see, the thin part of the candlestick, but it's not as significant as this one. And I'm hopeful that we stay above the $92,000 mark. And that's exactly why I said it's a good place to dollar cost average if you're interested. So we'll see. We'll see how we do this weekend. Okay. Nothing much with the Bitcoin dominance here. We haven't looked at Ethereum in a long time, so let's see what's going on over here. Again, not a whole lot of action. We're still far away from the previous high. Um, Nothing too exciting. So let's move on to Solana. Okay, what did I tell you guys before? The $187 line is key. Okay, now technically speaking, maybe we should go ahead and change this to the red color because now it's become a resistance line. We did retest it yesterday, or the previous 24-hour candle, failed to close above it, and now it looks like we opened slightly below. Well, we opened at $188, so perhaps slightly above, um, and now we're sort of forming a red candle over here. So now 2 weeks ago, um, I've mentioned that I was happy with this price, so I went ahead and bought in at the $187 mark. And you know what? I'm going to do the same. So I like this price. I mean, if you go, if you retest, so what are you going to retest? I mean, most likely just looking at it roughly like around $161. How do I know that? Well, so if I just draw a line here, for example, okay, say around here, okay. So this is what I'm referring to, historical data, and you don't have to go too far back, but you can see that multiple times there's a retest over here, then we broke down, testing, retest, then broke through. And you can see that in general, there's been a lot of activity around this particular price point. And usually what's going on is the bulls and the bears are, you know, contending with each other, trying to break through um, either to the upside or to the downside. So, it's really not rocket science. You just tell yourself, okay, well, am I seeing a lot of activity around these lines? And just as a caveat, you don't even really have to truly understand options trading or contracts. I mean, it gets a little more complicated when you start looking into more advanced strategies for trading, and that's not really relevant for us at this time. So just think of this as me explaining in layman's terms. So basically, I'm drawing a horizontal support line at the point where there's a lot of back and forth activity, and that is around $160 for Solana if we were to break further to the downside. But that said, let me see if I can pull up a price range line over here. So from the current price, I mean, I'm looking at a downside risk of about 14%, as you can see. Whereas my upside potential from here on out, if we're to, retest the previous all-time high or, even just over here, the risk is about the same, okay? And these are both conservative estimates. So honestly, we could break down lower or we could break down higher. But I mean, if you continue that logic, then there's really no limit to that um, to that range, to that limit. So basically, I just look at sort of what is feasible in the short term, and you can see that it's almost a 50-50 risk to reward ratio over here, and that's why I like this price because it's 50-50. And guess what? If it were to drop down to 160, and then I would continue to dollar cost average. So as many of you um, have also. So today I got my paycheck, and I'm gonna go ahead and invest about 30% of my paycheck into Solana, as I always do, and we'll see how this all pans out. And time again, I've really emphasized the concept of dollar cost average. This is not me being some old school trader, Warren Buffett style, saying dollar cost average, dollar cost average. The main reason I'm saying this particularly in cryptocurrency is because the volatility is so significant that if you try to time the market, you'll end up losing out more often than not. And of course, that's also a valuable lesson that I've learned the past two cycles and just from my own personal research of looking at past historical data. I mean, it's pretty similar in traditional equities too, but I mean, in the traditional equities market, you're able to evaluate more appropriately. So sometimes you don't always have to dollar cost average. I mean, sometimes you can invest um, lump sum cash and still, come on top because you know exactly, or you have a better idea of where, the price is heading. And unless you're trading penny stocks, the volatility is not going to be as significant. So let's move on to meme coins. By the way, absolutely getting destroyed in meme coins. Okay, so guess what, guys? I mean, that's the high risk aspect of meme coins, and you really need to have a high risk appetite. If you're risk averse, you're absolutely going to feel like just not good. Okay, you're not going to feel good. I mean, and I have a very high risk appetite, and even for me, I mean, this is pretty hard to stomach. And for the people who've been around for a long time in crypto, I mean, we basically only have to deal with this every 4 years. So, um, I'm sure a lot of people, including me, have forgotten about how in a way depressing this could feel. I mean, look at this. Negative 73% ish from previous all-time high. Guys, that's brutal. Okay, that's absolutely brutal. Okay, so um in the bigger scheme of things, it looks like we're still, where we used to be most of 2024. And so I want us to, be patient, have a mindset, have a strong mindset. I want us to be able to look at the bigger picture holistically. Where do we go from here? And I am hopeful that in the bigger scheme of things that we'll pick right back up. But so far, things are not looking very good. But as far as I'm concerned, okay, me personally, there's absolutely no plan to sell any of my assets right now. And this white dashed line we drew last time saying, okay, if we were to break down below that, then, well, we need to have another conversation, another discussion, because, that should be a pretty solid support line. Let's look at dog with hat. $1.53, getting absolutely crushed. Okay, and for dog with hat, it's a little bit different. I mean, this really should be the absolute minimum. I mean, if it goes down below $1.40, I mean, that's absolutely going to crush a lot of people. Okay. I'm not sure if this is also triggering a lot of stop losses. So if you don't know what a stop loss is, basically, um, it's a way a lot of people use it to protect their investments. So essentially, like a tripwire that would automatically sell your equities if the price went below a certain point. So let's say that I put a stop loss around, $1.40, and the price goes below that, then the whatever exchange or software that I'm using, it would automatically process the sell order. Um, and of course, that protects you from further downside risk. But it's not as easy as it sounds, because let's say that it triggered your stop loss and the price immediately went back above $1.40 and then keeps on climbing up. Well, you just missed out on all that gain, and now you no longer have any positions in the assets. So it's a good way to risk manage, but you could also end up having a lot of FOMO. And that kind of trading practice it requires a lot of practice and a lot of patience. And if you don't know what you're doing and you're setting um, stop losses at the wrong price points, then you could also miss out on a lot of profits. And you know that's really a conversation for another time. Down the road when we do more traditional equities investments. But for crypto, I really don't know how I feel about it. I'm usually more about, you know, looking at the price, um, not necessarily putting a stop loss and going to bed, but me staying active in front of my computer and executing the sell order if it comes down to that. All right, let's see what's going on with Turbo. If I can find it. So Turbo has been holding above the 80-cent mark, which is good. It's not great, but it's acceptable, and definitely. less downside pressure compared to the other two meme coins that we just reviewed. And I'm kind of hoping we stay at this level. I'd be happy if we could. And once we get a lot more cash inflow into the crypto market, then I hope to see some price action to the upside again. Of course, number one, we don't know if that's ever going to happen, the inflow of cash. And number two, that doesn't always translate to an increase in price of the asset that you're looking at, but at least that is the expectation. I'm not quite sure if people are waiting for, um, you know, the new president or what have you, but whatever the real life events are, whatever the macroeconomics are telling you, we're just going to keep that volume to a minimum and focus on what's right in front of us, which is objective data, technical analysis. And like I've said before, a lot of the time, the what we see in the charts, the technical perspective of it all is usually a lagging indicator, a lagging reflection of what happens in the real world. Like for example, what you might read on the news. But again, like I've said before, for the average retail investor, even if we were to read about those news, it's really hard for us to actually digest and um, translate that into market uh, price prediction. So I probably would not stress out about it. If there's good news, then that is pro crypto, then of course that is good for us. But I've seen many people get burned by um, having quote unquote hopium from pro crypto news because a lot of the times they're either already accounted for or they don't exactly reflect um, right away. So, anyways, I think that's all I have for you guys today. Hope you guys enjoy your weekend. If anything significant happens, then I'll see you guys back over the weekend. Otherwise, thanks for watching and thanks for listening in. Bye bye.